Thank you for joining us this Friday, the 26th of August. I'm Grady Wolf, a market analyst with Bell Direct. This is the weekly market update. As investor sentiment continues riding on recession fears, it may be time to revisit your portfolio and more specifically, rebalance your shareholdings to cater for rising interest rates and inflationary pressures. The important note to remember is that inflation is not a new thing. In fact, it has been around forever, and until recently was sitting comfortably within the target bands for many central banks around the world. In Australia, inflation fell between September and December quarters of 2021, but surged to 6.1% in the latest quarter. So what happened to push inflation through the roof over the last 6 months? Well, put simply, it has spurred from global events, including Russia's invasion of Ukraine, causing oil prices to soar, China's COVID-19 related lockdowns weakening global supply chains, and weather events domestically drying up the supply of produce. For the investing community, it's important to understand what sectors actually benefit from inflation and the RBA's rising interest rates so they can put their money where the price hikes are. The energy sector is up just under 50% year to date due to Russia's war with Ukraine, as Russia provides nearly 40% of the EU's natural gas and more than 25% of its crude oil. With sanctions placed on Russia for its initiation of war with Ukraine, other global producers of these commodities are very attractive providers for the EU and for investors in the current global climate. To access some of the world's largest energy companies, take a look at ETFs, such as ASX Fuel, which contains 45 energy companies over 10 different countries. Many consumer staple stocks pass on inflationary cost increases related to rising raw material costs and supply chain disruptions onto the customers. Since inflation hit 6.1% in Australia, shares in Costa Group are up almost 10%. Bega Cheese shares have risen 8% and the A2 Milk Company shares have jumped more than 11%. Investors should look for companies that produce essential products that consumers will purchase regardless of the price increases. And profitable tech companies that offer a product or service of value in the current global climate are also poised to benefit from inflationary pressures. WiseTech Global this week soared 9% after releasing FY22 results, including NPAT up 72% on the back of product price increases in the second half of 2022 financial year. Technology One is also surging as the SaaS solution provider taps into the global shift to hybrid working from home and offices in the post-pandemic world. Shifting focus to reporting season, 196 companies have reported so far. Just under 70% of those companies have either beat or were in line with forecasts. Earnings season ramps up yet again next week with 64 companies set to release results over the week, kicking off with FMG and Oz Minerals. Locally, the ASX 200 reversed last week's gains to close 0.93% lower from Monday to Thursday this week, as a more than 7% sell-off in consumer staple stocks across the 4 days weighed down the key index. On the other hand, energy stocks surged almost 5% this week, led by Paladin Energy jumping over 15% amid reports Japan is considering the development of new nuclear reactors, indicating the country has a renewed focus on nuclear energy. We've also noticed a lot of momentum in the pandemic favourite tech sector that has been hit hard with sell-offs in recent times. But investors have a keen appetite for tech stocks that are making waves globally in the current macroeconomic environment. Following the release of FY22 results this week, Bell Potter has increased its price target on WiseTech Global to $60 per share from $50 per share and maintains a hold rating on this stock based on global logistics software solution providers' relevance and strength currently. And Bell Potter has also upgraded its share price target to 24 cents per share on EnviroSuite and maintains a buy rating on this stock amid better than expected FY22 results. In the All Ords, Lotus Resources surged ahead this week, adding almost 27%, while Deep Yellow and Altium added 22% and 20% respectively. The most traded stocks by Bell Direct clients this week were Boral, IDP Education, Alumina, Pilbara Minerals, Lake Resources and Woodside Energy. Clients also bought into BHP and Whitehaven Coal while taking profits from Nearmap and Djerriwarrh Investments. And the most traded ETFs this week were BetaShares Geared Australian Equity Hedge Fund, BetaShares Australian Strong Bears Hedge Fund, and BetaShares US Equities Strong Bear Hedge Fund. On the economic front, next week it's a big week on Australia's construction and housing front, with building permits and private house approvals out on Tuesday, which will give an insight into the state of the country's building crisis. Construction work done in the second quarter is also out next week on Wednesday, in addition to the private sector credit data for July, and then Australia's home loans data for July is released on Thursday. Overseas, in the US, non-farm payrolls and unemployment data is out on Friday to wrap the week up, which will give an insight into the state of the US workforce. And that's all we have time for today. I'm Grady Wolf with Bell Direct. Have a lovely Friday and enjoy your weekend.